Hello, everybody. Jim Malone here, coming to you live on Dallas Trading Floor. Well, the banking crisis, unfortunately, is getting a little bit worse. And because of that, we're seeing a demand in gold. The demand is moving up in gold. Gold has kind of been in a slump for quite a while, but it's finally starting to make a move up. And there's an interesting way to play gold, and that is not to play it by buying the physical gold. That is one way to play it, but there's a way that you can get better leverage on that, and that is to play the gold miners. Now, interestingly enough, gold, of course, is mined all over the world, but in particular, many of the best mines are the ones that are in North America are in Canada. And the Canadian mines typically they fall into three kind of categories. You have the major miners. You have the intermediate miners, and only the royalty miners. What they are is they're junior miners. They have a control of income streams. They're basically like royalty rights. And then you have the junior miners. The junior miners are basically more speculative. They basically don't have production. So that's kind of the way that's the kind of the way it rolls out. Um, Here's what I've been doing. I've been looking at this sector just because, we've had this weakness, and now, we're looking to see if we can get something going here. And I did find three very interesting stocks that I want to kind of point you in the direction of. I mean, who knows what's going to happen with these? I did invest in these myself, so this isn't speculative on that sense. It's definitely. Let's see if I can get it up here. Uh, Sometimes I have to reset this. There we go. So we can definitely see it. But oops. Let's see if I can go smaller here. There we go. All right. And one of the stocks that I've been looking into is symbol AEM, and this stock is a major. There's basically Barrick, and there's um, uh, Barrick Gold, but they're not growing as fast as this stock. And I want to show you the stock. This kind of took me by surprise, but I definitely took a position in it, and I want to show you this one here, and that is it's called it's called Anaco Eagle Mines. Anaco Eagle Mines, and basically what it is they primarily operate in Canada. Now they do have some mines in Mexico as well, and I think in Australia. But this is a strong contender. It has been moving up in relative strength. Now normally I don't buy anything below a 80 relative strength. In this case it's a 63, so it's a little bit out of my character for me. But as you can see, we've bottomed and we're starting to move up, and we're starting to move up as well. This was up today, and it was up after hours because of the demand for gold that's coming in to the market. Interestingly enough, they did come through earnings. Now they're going to come. They're going to be in 24 days. They're going to show another earnings. I'm expecting this is going to be a good earnings here. Their sales are up 48% last time. Profits were down a little bit. So interesting what's going on here. The deal with this one is that it is a dividend payer, paying a significant dividend of about 9% on equity. So that's something you might want to consider. I think we're going to be in a rising market for gold. And the interesting thing about gold is gold has a very interesting way it's accounted for. It's unusual in that it's unique really in this area. When gold is mined and it's refined into bars, even before they're sold, they're put onto the balance sheet as mark to market. They mark them to the market. So if the price of gold is, let's say, $2,000 an ounce, it immediately goes onto the balance sheet as an asset of that. That's not true of a manufacturer. When a manufacturer like GM makes something like a Chevy Suburban or something like that, it does not go onto the balance sheet as an asset. It becomes a work in process, and then it becomes inventory, which is then sold to the dealerships. So one of the great advantages if you have a rising price of metals is that the company can immediately recognize this an asset. Now, if the price of gold just goes up a tiny bit, the margins will increase significantly. Currently, it's about $1,500 or so to mine an ounce of gold at this in this company. And so we will probably see, if the price goes up to say 2,000, we're going to see a tremendous increase in margins that they're going to be able to extract from their from their operation. So very interesting, very very interesting thing to look at in terms of that. I also have another one. Now this is an intermediate sized company, and it is essentially a royalty company. And basically, what it does, also in Canadian mines, is that it collects royalties from other mines that are in production. This is less speculative than some of the junior miners that are basically opening up mines and developing mines, because you see it can take 5 to 10 years sometimes to develop a mine, and you're totally at the whim of the you're totally at the whim of what's going to happen. I mean, the price can fall, the price can rise. A lot of things can happen between when they start developing a mine and when it becomes a production mine. This is one I want to show you. This symbol on this is OR. I bought this one today as well, and it's just something that I think that might really be of interest. It was up today as well. Let's take a look at it. See if I can pull this one up here for you. The chart on this one. There we go. All right. So this is symbol OR, and this is Osco Gold Royalties. I can't pronounce this very very well. They just went through earnings in December. Their last December, their sales were up 22%, but interestingly enough, their profits were up 38%. So this is very strong. This is also coming out of a cup with handle formation, and it has a relative strength of 95. So this is the stronger of the two. AEM is essentially a major. But this one, the Osisko Gold Royalties, this is a stronger stock in terms for technically, and that is one of the reasons I put into it. Now it does have, it's less stable on its earnings, but I'm starting to see a lot of action come in here. You can see a lot of these blue bars here on the weekly chart. That is institutional buying that's coming in to the stock. And again, we had a nice day today. We had some nice institutional buying coming in. Now, unfortunately, this one is getting a little bit extended. I bought it kind of at the last minute. It is currently 10% above the 21-day average. So my gut feeling on this one is to wait a little bit. Let's see if it pulls back closer. Let's see if we can get the 10-day or the 21-day line to catch up a little bit with this one, to see if it's something that will work. But these two stocks, I think that you might want to put them on your list. Of course, one is AEM, and then the other one is OR OR. So let me put that up for everybody, so you can see that on the banners. Let's put that up on the banners. So the two gold stocks are AEM and OR. So get that up there for everyone. So that's kind of the way I'm seeing it with these two gold stocks. We'll see how they do. Again, OR or Osisko Gold Royalties. This one's a little bit extended. It's a very inexpensive stock. I mean, it's a $16 stock, and it's trending nicely. So earnings are in 21 days. So we'll see what happens there. We'll see what happens with these stocks. But those are two that I want to kind of look at. Totenium 2020. This is from TikTok. Is indicating AEM, and let me show you what this stock is, just so you can see it. It is this one is AEM, and the name of the stock. Let me put it up here. Yeah, there we go. The name of the stock is Agnico, Agnico Eagle Mines. It's based in Toronto, Canada, and very strong stock. It's just moved above the 21. It just moved above the 50-day line. As you can see that there was where I purchased it basically. Basically last week, 52.47. Currently, it's 52.55. It's up a little bit, and it looks like it's getting strength off the. Now, this one is a little bit easier to buy right now because it's not quite 5% above the 21-day line. So that makes this one a little bit better buyer. It's not extended, so that's one of the things that you got to look at. You got to look at there. All right, let's take a question from TikTok. Thank you so much for holding, as usual. All right, I bought XOM off the 200-day line a few days back. You should definitely add more, Fernando. Right now, we're seeing a matter of fact, I've been looking at XOM. What Fernando was talking about here, of course, is ExxonMobil. ExxonMobil is showing a lot of strength. Now, part of the reason ExxonMobil is showing the amount of strength that's showing is because the Saudis have cut back on their production. This is going to make the price of oil go up probably to at least $90 a barrel. By the way, I checked today, and there is a record number of drilling permits that have been pulled in the Permian Basin of Texas. This is the largest oil field in the United States. So something you want to look at. We're seeing a shift to some of the oil stocks as well. So right now I'm looking at where I'm seeing the strength. I'm seeing the strength basically in three areas: chips, gold, and oil. So the integrated oil play is easy play. It gapped up today. This is Fernando. You made a great move on that pullback to the 200-day line. Very smart move. As you can see, this is always when you have a quality stock like Exxon, buying it at the 200-day line is a great move. I should have done this myself. I need to eat my own dog food. But one thing that you want to look at, and this is one of the reasons why owning, at least for right now, Exxon is superior, is if you look at the statistics here, and this is the last quarter, sales were up 12%. Now, 12% on a stock like this is amazing because this is a huge, huge company. But interestingly enough, the profits were up 56% quarter over quarter. This is phenomenal. This is absolutely phenomenal. By the way, ExxonMobil has a PE ratio, price to earnings ratio, of 8. Now, there aren't very many stocks in the world that have a PE ratio of 8 that have paid out every quarter for 130 years. Exxon is one of those stocks. Very, very interesting stock. Very, very interesting stock. I still think it's viable at this level. It has a 99 relative strength, which means it's in the top 1% of all stocks currently. Now, here's the thing about the technicals. If I go back to the daily chart, and we want to try to buy when we're looking for an entry, we want to buy as close to that 21-day line as we possibly can. And if we look at the technicals here, and hopefully it's going to give us the technicals. Okay, there we go. We're 7.39% above the 21-day line, even this is extended. Now, here's one thing I want to point out. Typically, when you see a move like this, it gapped up today, you're going to see a pullback, and that's definitely what's happening here after hours. Currently, Exxon in the after hours market is trading for 116.05. Now, if it pulls back a little bit more, I still think it's viable even at these levels. I would like to see it pull back a little bit more, a little bit closer to the 21-day line. Now, if we're looking at an ideal place to buy this one, currently the 21-day line is at 108. Is at 108.13. And if we multiply that times 1.05, which will be 5% above, when this thing pulls, if this thing pulls back to 113.50, that's where you want to be buying it. 113.50 for ExxonMobil would make an excellent buy. And I definitely think that, you don't want to buy it right now because it's going to pull back a little bit. But, XOM buy at 113.50. I'm going to put that up on the screen. Hopefully everyone will see that. Let's see if I can put that up there. Did I put it up? Did I put it up there for everyone? Hopefully I did. Oh, wait a minute. Hold on. Okay, let's try that again. X XOM buy at 113.50. Now, this is not a formal buy point. Okay, I want to make clear on that. This is not a formal CAMSLIN buy point. It is a secondary buy point, but still a very good buy point at that. So if ExxonMobil pulls back to 113.50, that's where you want to start building your position, I believe. I think we're going to see a lot more strength in the stock because it's gapped above that 50-day line. That's showing a lot of strength. We're seeing a lot of acquisition. We're seeing a lot of big funds coming in here. So remember, also, if you want to take a little bit more conservative approach, you can buy the XLE, which is the Spider Select Energy Select sector. It's basically Exxon and Chevron. But I think of the two stocks, I think the better of the two is is Exxon currently, and it's really set up nicely. So it's a beautiful setup, and it's something that I think that you could definitely do. You could definitely do something with. All right, let's take a look. The next question. Thank you, Ben. Oh, sound. Am I not getting sound on the? Let me see if I'm. Hopefully, you should be getting sound there. Okay. Did you get some? Let me check the sound on. Let me just check the sound. Make sure I've got good on the sound. Hold on. I'm having. Okay, it should be. I should have pretty strong sound on the YouTube channel. If you're not seeing it on TikTok, jump on over to YouTube. It's a much better signal. YouTube.com/Dallas Trading Floor. So that's where you probably want to be if you're looking for that. If the sound isn't moving correctly, there. All right. What's going on with Tesla? Okay. Well, this is the problem in the market. We're still, even though we're technically in an upward trend, Tesla is in trouble. I think again. I mean, they did have some good numbers on on their orders, but the problem with Tesla is that it's just taking. Come on. For some reason, it's not allowing me to. I'm not able to shut the window here. Let's see if I can do it. Moving over here. All right. There we go. All right. There we go. Tesla. Having a little bit of bandwidth issues again. Unfortunately, it takes a lot of bandwidth to run this program, and unfortunately, sometimes we just don't have enough here. All right, so let's go to let's go over to Tesla. Having a little bit of issues getting to Tesla here into the chart. There we go. All right, so we should have the chart for Tesla. There we go. So now I can move it. So currently, what's happening with Tesla? Let's see if I can put it over here. Having to move my windows around here a little bit. Sorry about this. Sometimes it gives you a difficulty. Okay, come on. See if I can set it. Let me set it. Okay, well, we'll do the best we can. All right, so right now, this is the chart of Tesla. Make it as big as I can get it here. There we go. Giving us a little bit of issues. There, come on. Oh, goodness. Just not letting us see it. There we go. Oh, come on. Ah. Okay, I'm having all kinds of problems with my system. Let's see if I can. Yeah, just it doesn't want to cooperate. See if I could shut down Windows here. Oh, Golly, everything but. Okay, let's see if we can. I'm having trouble getting to my. Let's see if we can go to the slides because these are the slides that are more reliable. All right, come on, baby. Anyways, look at the gold royalty stock first, and then I'll see if I can get my charts back here. But anyways, this is the stock that I was talking about earlier today. It was up. It's this is OR is the symbol on this one. All right. Let's see. Let's try another question because hopefully I can get my charts back here. I'm going to try to relaunch relaunch my charts. All right. All right. I think this will work. Let's see if we can take down the size a little bit. Maybe a little bit more than that. 75%. So that we should be able to see it now. There we go. All right. So let's see if we can go back to Tesla. Sorry about this back and forth, just not really having some issues today. Okay, there we go. Let's go back with Tesla. There we go. All right. With Tesla, the situation that we have here, of course, we're in a issue, as you can see with Tesla, and this is one of the reasons why it's just there's a lot of overhead supply on Tesla, and basically at 200, that's the level where that overhead supply comes in, and so anytime it moves above that, you're just at the mercy of the market, and it's gonna move lower. So I suspect it came up to this. We're gonna see it pull back. We could go as low as about 180 on this one. Again, I just wouldn't be buying Tesla at this level. It's I mean, I do think that it's a great stock, but I think it needs to move lower. Tesla could move as low as $50 before a floor happens. What's happening with Tesla, and the reason why it's so volatile is because there's so much overhead supply. And what I mean by overhead supply is this. If we go back to the monthly chart here and you take a look at it, you can see most of the people bought Tesla above that $200 level, okay? So what's happening is every time it's coming up to 200, people are saying it's time to sell, so it can't go any higher. So 200 really is the resistance there. And so it sometimes will come up a little higher, maybe to 215 or so. But every time it gets up there, there's these people up here that bought within the last 18 months are selling. Let me show you the line here. Basically, what's going on is that there is at 18 months, I'm drawing a line, there is this overhead supply line. So if it comes up to 200, which it did, you can see all of these people bought way above 200. So they're saying, I want to get out of it now. They're selling. So this is causing a lot of overhead supply, and that's the biggest problem that we're having with Tesla. So right now, I'm just kind of watching Tesla. I'm not really doing anything with it, and it's just the kind of the way I'm going. All right, let's look at Amazon. Amazon also has some issues, but let's take a look at Amazon as well. Hopefully, I'll be able to see it. All right, hopefully my charts will come up. Yes, it did. Yay, team. Okay, the charts are looking much better. All right, so let's look at Amazon here. Here's the problem that I have with Amazon, and again, this is a valuation problem. This is a problem that's really caused more, just by the fact that I think that right now, at least relative to some of the other stocks, I think that Tesla is overvalued, and the reason I think it's overvalued is because of this price to earnings ratio. Let me show you that. What's going on with that price to earnings ratio. Remember we were just looking. We were just looking at. We were just looking at. We were just looking um, at ExxonMobil. You remember that? ExxonMobil had a price to earnings ratio of 10. Amazon has a price to earnings ratio of, well, it actually is it right now is it doesn't even have a price to earnings ratio, but the PE ratio is the minimum it's been has been 42. So if you're looking for earnings, and right now cash is king, if you're looking for earnings, the earnings on Amazon, if the stock is not going up, and it definitely is not, as you can see, it's been in a downward trend. You're looking at a stock that's going to underperform a stock like Exxon. So it's better to put your money right now, your eggs in the basket with Exxon, and skip Amazon for a while, just because it's just the forward looking. They're looking at a lot of pressure, and it just isn't looking as good. Let me kind of compare. Let me show you what I'm talking about here. I want to compare over the last year or so, Amazon with ExxonMobil. So that's what I'm going to do here. So I'm going to show you why ExxonMobil is currently the better of the better of the two stocks. And if we could just move over here, hold on, let me get this up. Now, looking at it over the last year's performance, and I think that we not necessarily should be looking over that long a time. Now, you can barely see this, unfortunately, because of the coloring on this chart. But if we just look at the last 6 months here, Amazon has lost in the last year. Amazon has lost 35% of its value, but yet ExxonMobil has gained 40% of its value. So we're looking at a situation where the price to earnings ratio does matter. Now let's just look at from since the first of the year, because we've basically finished the first quarter. So let's just take a look at the performance in the first quarter. In the first quarter, now, yeah, in the first quarter now, interestingly enough, Amazon has outperformed ExxonMobil. But if you'll notice, the trend is ExxonMobil is making a move up. So in my humble opinion, I think that you're better off, at least currently, with Exxon. So let me see if I can. Yeah, there we go. So we're coming back to the chart here. All right. So let's okay. What chart was that? Okay, that's a comparison chart, by the way, global traders. That's a comparison chart between ExxonMobil and Amazon. And I wanted to show that because to show you, the difference between the two stocks, because I think it's really, really important which sector is doing better. Now, the oil sector, a lot of people don't like the oil stocks, but right now they are printing money. They're literally printing cash. Everything else, because of the recession, has become very, very difficult for people. There are two areas that people are going to be paying for. One of them, of course, is food, and the other one is fuel. So I think that's going to be the situation there. All right, sound is good. Oh, thank you very much. Okay, let's look at the XLE. The XLE is an ETF that covers the energy sector. XLE. Let's take a look at that, and let's compare that against for the last, basically for the last. All right, let's look at the daily chart on the XLE, and I think that's going to be very instructive. Oops, that's the wrong one. Let's look at the XLE. There. All right. So now this is the XLE, the Energy Select Spider. This kind of covers um, the entire energy area. Now it has been in a downward trend since since about January. Okay, so the trend in energy since January has been down, but I suspect with this gap up here, we're going to see a reversal in the trend. This is a good time to possibly look at putting some exposure into the energy sector, because it is looking like it is starting to make a bounce off of the 200-day line and moving higher. You can see that I think that we've got a reversal. It's been in this downward trend for this first quarter. Now the results are coming back, and with this banking crisis, I think you're going to see money move into the oil sector and possibly into the mining sector. So those are the two that I'm looking at. And in the techs, we're really looking at it coming into the chip sector. So those are the areas that I'm looking at the most. All right. Well, thank you very much, everybody. Let's see. Any more questions from TikTok? Take a look here. No. All right. I like the correlation, but I don't know how to trade them. Very good question. Which charts? Okay. Well, the way we trade, the way we trade things is we trade them as they're coming out of bases. Now, one of the things that we're seeing is we're seeing a movement into some of the big oil stocks right now. So let's look at ExxonMobil, XOM, and let's take a look at what area that it's in. It's in the oil and gas integrated area. This has actually been a relatively poor performing area for the last 3 months, but this is starting to change. We're starting to see a lot of strength come into this area. So one of the ways you could play the oils would be by buying the XLE, because it's both ExxonMobil and Chevron. It's the major oil company. So that's looking good. Now, you want to buy something when it's in a good in a good overall position. Right now, in the oil stocks, ExxonMobil is actually very well positioned relative to its strength. So let it pull back a little bit to about 113.50 on ExxonMobil, and I think then you have a buy there. So that might be a kind of a good way. And my dad has a lot of ExxonMobil. Well, that's a good thing to have right now, because there's a lot of strength in ExxonMobil. The dividends, it's an 8 PE. That means that if you buy the stock, it's producing earnings equal to it basically equal. If you take the earnings, you divide them by 8, it's producing that much earnings, which is phenomenal. The lower the PE ratio, typically, the higher the performance of the stock. Now, this is not true with growth stocks, so I have to caveat that. But right now, some of these growth stocks are in the ascendancy, and ExxonMobil definitely is leading the way. All right. Well, thank you very much for all that. I'm going to be back tomorrow at 5. Do get your questions ready. I'm going to start doing some more studies on the gold miners. This is an area that I don't know a lot about. I've just started really buying in this area. I haven't really done anything in this area for years. We haven't really had the inflation problem really since the 1970s, and I think that there's several categories of products that do well in inflationary periods. One of them, of course, is oil, and one of them is gold. So now we don't want to necessarily own physical gold, because physical gold is mainly being sold to Asian central banks. Where the best opportunity for gain is in the mining stocks, and specifically, I believe, in the Canadian mining stocks. And that's one of the reasons why OR, one of the stocks that I did buy today, that's worth a look, see, and also AEM, which is one of the big Canadian gold mining companies. All right. Well, thank you so much, everybody. Thanks. Tell your friends about the show, please. We really depend on, we really depend on your support. And one of the ways you can support us is by going and smashing the like button. This really helps us out. Believe it or not, the algorithm gets us out to a lot of people if you smash the like button. So let me get the smash like button thing. Well, goodness, where is it? Well, so at least smash the like button up there. So smash that like button. Really appreciate it, and also smash the big like button. That really helps us. By the way, if you're not already a member of Action Trade Alerts, you can sign up for for our newsletter that we send out. And it's not, every week or anything like that, but when there's special stuff, we put it out there. And that is at www.dallas Trading Floor. So until tomorrow at 5 o'clock, everybody, happy trading.